In this video, we are going to be analysing Micron ticker MU. Now, what is really key on this stock, especially we're down 4% on the day, but most likely why is this? So what you can see on the left, we have a 6-month chart. On the right, we have the 1-year chart. What level did we start to hit into? We hit into the 67.75. This is our second deviation on that 1-year chart. Again, on the right, we have the 1-year chart. On the left, we have a 6-month. And again, whenever we're coming into that second deviation or above, that is coming into extremely overbought areas, and that tends to be where you see overall stock reversals or at a minimum pullbacks. And that's exactly what we're seeing here now. We're kind of overbought. Again, people are going to be locking in profits, and then we get this initial pullback. We can see we've already pulled back about, we can see we're currently sitting around 4% from the deviational level. And where do we expect this pullback to push down to? Really, we would expect to see this overall pullback be around 7% and take us to $63, because $63 is our closest deviation, which would be $63, first deviation on that 1 year. Now, this is key because this is, if it acts as a pullback, this is most likely our target that we pay attention to. Now, if it's an overall reversal, we do expect it to continue further, but no matter what, even now, I would be locking in profits. My stop would be moved to break even, because if it does come back to retest that 67, 68 level, we will most likely break through. So if you're holding it short, again, that's where I would definitely be taking profits now. But the key level I would be paying attention to is 63 to be locking in the majority of that profit. And then right below at $62 and around 10 cents, we have our statistical mean on the 6-month. Now, this is what is considered fair value on the stock. If I was holding it short bias, that would be my absolute final target. But again, considering it's so close to that 63, I would probably just get out at 63, because we would most likely get a bounce at this level anyway. So instead of seeing that bounce, potentially holding through it and then waiting, it just seems, for the sake of about 90 cents, it could just be smarter to get out when we hit 63 if we go all the way down to that. Again, can never guarantee that, and that's why right now, if we were short, we're looking in profits, move that stock to break even. So that's kind of the key thing we're paying attention to right now. What are key levels also that we'll be paying attention to? So just to note down all the deviational levels, we have one at $66.20. If we went further, we have $70.30. And then going on to $72.60 and $74.50. Now, these are going to be the two key ones, $72.60, $74.50. These are our third deviations on the 6-month and the 1 year. Really, you never tend to, especially on these large cap stocks, you never tend to see stocks break above these levels, or at least trade above them. You may see like small, 1-2 day breakthroughs, but very quickly you tend to trade back below that level. So if we do start breaking up to that level, they're really high probability short bias levels that I'm paying attention to, and will probably start taking myself. Again, obviously, if we do break higher, we do also have that $70 level to be paying attention to. Again, a high probability short bias level. Not going to be as strong as the $72.60 and the $74.50, but definitely still a strong level. And again, we did note we have statistical mean at $62. Our other statistical mean is at $58. So what this really means is between this range. It's not an area I ever look to trade or hold a stock. I tend to use it as a range to trade to. So if I was long short bias right now, again, that would be my absolute final target. Now, if I was looking to be long bias, buy this stock for the longer term, again, $54 and $53 were levels that I would be paying attention to. Second deviation on the 6-month, first deviation on the 1 year. And if we were to break that, we have basically $50 and $48 as further down supports. Now, what we do have on Micron to make it a bit more difficult to trade is on the 6-month. We have a very clear and strong uptrend. So the shorter term is a strong uptrend. However, on the 1 year, we're kind of flat and tiny bit downtrending. So this kind of means is the two terms, the short term and the long term, are diverging. Whenever I see this, again, I always do a bit less size. I think it's always an easier opportunity when they're both trading in the same direction. But I just wanted to point that out. Now, again, you can see why these deviation levels are so key. You can see we opened today. Obviously, we opened up below this level. We came back, retested it, pulled down, retested it once more, fell down, retested it again, fell down. So again, it's really showing this 66.20, which is our, I think, first deviation on the 1 year, is really strong. It is holding up. So again, on the 6-month, is holding up. So if we start to break above this level again, if I was short, that's where I'd probably be cutting shorts as well. If we start breaking and closing above here, so probably I'd be having stops around 67. If we're breaking 67, this downtrend or this pullback is probably over, and it wasn't a reversal, it's just a pullback. So again, I would be watching that for though, because again, we do have opportunity all the way down to around $63. Hope you enjoyed the breakdown. If you did, why not drop a like and subscribe and check out this analysis video.